Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 25th. Michael Boutros with you on the wire today. Aurelian, JP, great to see everyone in the room. ECB is ongoing. I have one eye on the terminal and one eye on the charts, so I will alert you of anything that crosses. But some interesting moves today with the dig deeper, okay, as far as euro lower, dollar higher. But some of the moves I noted yesterday look very precarious here, okay? Smell some sort of fake out on some of these. So we'll go over euro, DXY, dollar CAD. Swissy broke out an overnight trade to the upside. Gold prices, little move higher, but still not thinking that we're getting continuation just yet. Aussie will hit Kiwi with this slide into support. SPX, Pete, I see you in the room. SPX is sort of, we'll have to work straight off slope from here. Let's just say it like that, all right? So we'll look at the levels from that breakout. I haven't changed the chart. I thought we'd do it together here on the webinar. Crude prices for anyone who's looking at them. Silver, I don't know if anyone's following that setup from last week. And a quick reference on sterling. You know, it's the levels are continuing to contract into this consolidation range. It's ridiculous. So something to be aware of as we get these headlines from the UK. And I have dollar yen on here. I was in a short for like 2 days. Nothing's really going on with it. So we can take a look at those levels if anyone's trading that as well. Obviously, tomorrow's US GDP. Obviously expected a much weaker print than the second quarter, but or from the first quarter rather, but rather should be interesting to see if that hits dollar at all as we press these highs. Let's jump right into the charts. So what we got with the ECB this morning, obviously they did nothing. They held on rates. Teased with a little bit more QE. So the hold on rate saw a pop in the euro. Teased with a little bit more QE, saw the drop in the euro. Let's just jump right into the levels. We'll cover DXY in a moment. I think it's a pivotal moment. This that 97.87 level we've been talking about. But here's euro, okay? So a big reminder of where we are in the euro weekly charts. Obviously, we've been talking about 1186 for weeks. We've been talking about this longer term slope for months. And it looks like this is the first validated, like, serious test of it. Now, the yearly lows comes in at 1107, which is basically what we're trading at right now. Any lower than that, and we're looking at a break of the yearly range lows. We're looking at a break of slope, upslope support. We're looking at former inflection slope, which has been so clean in price, and really changes things. You're looking at like longer term, like 110. Got some near term targets at 110.90, 110.80. I'll show you that in a moment. Did anyone have trouble getting into the webinar today, guys? No, all good, says Pete. All right, thanks, man. Looks like Pooja's having a little problem. She's just tweeting at me. So just, whoops. Sorry about that. Can I get the combo of DXY? Yeah, I'll give it to you in 1 sec, Ty. So the longer term prospects here are huge, right? So we've got to watch the close as we head into the US trade session. Here's the daily chart. Now, this slope wasn't on here before, just to give you a quick reference, off the yearly highs and the yearly low that we made, puts the median line basically at the exact high we just nailed, like on the spike for ECB. It's ridiculous. So from that standpoint, really puts the emphasis, or the controlled momentum in the side of the bears here. This is your yearly low. Okay, so you get some slope somewhere around like 110.70s, 110.80s down here. It's just going to be the objective 25% line of the pitchfork off the highs. You saw the upper 75% line caught serious resistance, a little bit of a glitch there. Acceleration and support at the median line, resistance. Looks like it could be a possible play, right? As far as the proper slope here. So my base case scenario, just so you guys knows, is some sort of fade off this region if the US trade session holds these. Even if we spike lower, we start to settle back above. That's sort of my ideal scenario. If we're just in a steady pace below 110, 111 rather, into the US Open, there's really nothing to try to fight here, guys. Here's the near-term levels I've been looking at, okay? And from yesterday, we added this new slope just off the highs that we just recently made right here in, what is that, July 15th, okay, into the close of last week. The lower parallel, right? That's just lower. So even if it drops a little bit deeper, 110.90, there's that 110.8, I mean, it's a whole litter range, guys. We're working with just slope from here. But you get the picture. Nice spot to maybe see exhaustion if this thing's going to fake out. And I'm just having trouble grasping a euro drop for multiple days, hold on rates on ECB, Mario Draghi, whatever it takes. We've heard this before, right? That's just going to continue to drive it lower. It's a tough pill to swallow. So I'm kind of looking for the possibility of exhaustion here. Any questions? Draghi says significant monetary stimulus is needed, risks the economic outlook still tilted to the downside. Manufacturing particularly affected by weak global demand. Incoming data point weaker growth in the second quarter and third quarter. Risks include geopolitical, protectionism, emerging markets. These are all comments that are just hitting the wires right now, guys. It's kind of a little bit more of a padded view, right? That inflationary pressures remain muted and indicators of inflation expectations have basically declined. So he's basically padding, opening the door forward. With Lagarde, the printing presses being ready, it says Ty, I agree, right? So I'm not going to argue the fundamental part of this, right? That's not what we do. I don't, particularly want to waste my time doing that. But from a trading standpoint, the markets have been pricing in both softer monetary policy from the US and the ECB at this point. Is it warranted for us to break fresh lows? Now, if this breaks, like I said, we should see acceleration. There shouldn't be sort of a slow meander. On the back of a 4-day decline of more than 1.5% in the euro, is there enough juice here from what he's saying to really perpetuate the next leg lower? I would argue, from what I'm reading right now, not particularly just yet. Here's some other comments coming out. Labor cost pressures strengthened in tight job markets. Underlying inflation remains generally muted, and inflation to pick up towards the end of the year. So remember, guys, they're pretty slammed on rates already. What are they going to do from here? I'll let the fundy guys work with that. For us, we're looking for near-term exhaustion. Now, I don't want to kind of miss the opportunity here. So here's the 5-minute chart. Looks like here's the 10-minute. So 5-minute chart, you see some divergence. 10-minute chart just shows divergence. This is an outside reversal candle. 30-minute will be an outside reversal candle if that perpetuates at this point. No divergence there just yet. Interesting. I mean, I'm all for trying to press it from here, just for a near-term rebound. Again, it's gonna be all about the U.S. Open that really determines whether this is gonna hold or not. Okay. Any questions on euro before we move off? You can hear the excitement in my voice. I've been waiting for this one for a while just to see how it reacts at these lows. It's kind of do or die here. All right. Moving right along, DXY coming right up, Ty. Here's what the DXY looks like. So that, as we were talking in the webinar just at the start, I was saying was hitting resistance 98.787. Don't know if it's going to hold, but it's basically the same play. Now for DXY, my hesitation is that this is already a kind of a larger confirmed breakout as well, but it's still the same exhaustion play, right? You're getting divergence on the 120. I wouldn't call that divergence on the 60. Divergence on the it's a 3 rather. There's the 30, no divergence there. So it's not as strong a signal here, right? Price action is not quite as telling. Watch the US Open, less than an hour to go. Look back rather at the DXY weekly chart before we close out the week. Not only is the 618 retracement of the entire 2017 drop, basic trendline resistance off those highs. Now it's only like a 3-point touch if you confirm, or if you count like both of these weeks as a touch. So it's here as well, just highlighting this zone. Could it get a little higher from 97.87? Sure. The weekly objective Swing high is 98.37. Recall that in the euro, it's 11.06. We're already there in the euro. We're not there in the DXY. Again, a lot of times these divergences into major highs will be something to look for. So it's really telling. The end of the day, all things held equal, price closes and mounts at 97.87 on a close basis. Euro 111.07 on a close basis. Yeah, you're looking lower. Okay, is there a trade there? We'll have a confirmed bias, but is there a trade there? You really got to respect the levels, guys, and don't get caught up chasing these moves. So those are my takes on Euro and DXY. Now we just covered a lot through there. By the way, a topside break in DXY, the next lateral levels of significance would be 98.33, 98.42. Ahead of that, I would rather, I would be mindful of the upper parallel here because this pitchfork that we've added seems to be holding rather well. Here was the last update on DXY. Okay, we were coming into 97. I keep saying 98, 97.87 on that breakout. Remember, we were looking for strength early in the week. This is where we were looking for failure on initial pullback. Levels remain unchanged, right? 97.50 still support. We almost pulled into that yesterday. Here's the actual tag of 97.87. Hey, Pooja. She says finally here, better late than never. Sorry you're having issues there. It doesn't seem anyone was having issues, but always feel free to shoot me a tweet if there's an issue. Okay, questions, comments on DXY, going once, going twice. That is number 2. Number 3, dollar CAD. So the consolidation, this thing is like imminent. Looks like it's breaking to the downside while we speak. Here's the pullback. So recall dollar CAD. We've been following this one very closely early in the week. Here's what it looks like on the 22nd. We were talking about this pitchfork, looking for failure, 131.45, just higher. You had that median line confluence, 75% line and basic channel resistance. We got to drive into that, right? We got to drive into that, and it just sat there for a while. Last night, we highlighted all the charts again, saying, well, look, it's basically the objective monthly opening range high, was the 31.45 basis. And then again, slope was right there. We closed, right there. Right? We didn't even push through that trend line. So yeah, the risk is for a pullback from downtrend resistance. That being said, it looks could be a continuation pattern if we press through 31.45. I don't have any exposure on this. I was kind of trying to fade it from here. But then on the pullback, it really fizzled out. And the same thing with dollar yen. I got in dollar yen as soon as we spiked early in that week after the webinar on Tuesday. Sat there. Finally, I got fed up and I put a break-even stop just because it wouldn't do anything. And then, it just got taken out. So what do we do from here on these sort of range-bound trades? You have to wait for the more definitive move. The favored move would be to pull back again. And even if it is going to break higher, that would fail. Okay, ahead of the monthly open, ahead of this slope. So that's kind of my mindset on dollar CAD. It's just been a nice 4-day, 5-day stretch right into this 4-day stretch into this resistance range. The objective, monthly opening range high. Yeah, get some kickback, but you look at this and you think that, okay, well, if it does break and close 31.45, it suggests that there was a more important low registered last week. So little split on this. If the consolidation breaks lower or we pull back finally from the opening range high for the week, look for support at this median line ahead of the July open if it's heading higher. Any lower, and you're basically looking for resumption. Again, keep in mind the rebound in dollar CAD based on weekly charts was based on this critical zone. Okay, 38.2, a basic retracement of the advance off 2017, 100 off this high. So even if it's just a corrective pullback, that would allow 29.70. So it was a big range, but upon looking at momentum fail right at 40, upon looking at price action over the last 4 weeks, a pullback into near-term resistance was warranted. Here it is. Again, definitive pivot levels on the DXY, on the euro, on dollar CAD near term, right? The monthly range highs here, and you only got a couple of days left on the month. If it breaks, it gives you that bias heading into the close of July. Big levels here, guys. Stay nimble. Any questions on Loonie? Okay, dollar Swiss. So another one that was number 3. Here's dollar Swiss number 4. Another one where I thought you were going to get the pullback to get long. Didn't get it, right? And the falling wedge pattern that we had talked about early in the week did end up being basically the formation that's in view here. Here's, I mean, the weekly chart's not so telling, but here it is, right? Obviously, the last time we visited this, guys, we were just approaching that key resistance after the break. Looked lower from this zone. We saw the move through the yearly open. We came into the opening range lows of the year. Spike held. We want to see resistance here if we're going to see that last leg lower, but it didn't. Sailed right through, and for the last 3.5 weeks, we've been straddling the yearly open. Really objective stuff, kind of neutral momentum stance, just below 50, not much of an upslope, not much of a downslope. So they're not, in all intents and purposes, this looks like a just consolidation pattern. Daily chart had a little bit more justification to play the rebound because of where it bounced off of. 50% retracement. Then you had the lower parallel there, right? Nice move to the upside. Here was the failure. I was favoring sort of a washout towards here, maybe even to fill the gap to look for the long position. At the end of the day, it just broke the near-term range highs for the week. It just broke downslope resistance, 3-point touch. Here's 99. Okay, so on this one, can't remember if there was a decent slope I was playing with this morning. Oh, I was looking at, okay, I was looking at this. The 50 line, 25% line rather, didn't really do much. But on just a basic interpretation of the breakout slope that could be in play here, puts the median line there. My whole point is that now you want to choke up near-term bullish inval to that same objective monthly, yearly open rather. It's the spike low that we made yesterday on the pullback. Slope would be in there, be a nice place from where it turns here. That's near-term bullish inval, meaning as long as price pullbacks stay supported above this region, the risk is for that wedge to be a confirmed breakout. Next topside target, if we push through the median line here, you got that 75% line there. Wouldn't really get too, well, you know what? Those highs are right there too. So some soft targets here. If anyone did jump on this. Near-term resistance, 99.51, 99.65 would be a 50% from the drop. And a decent pivot in price, I might add. Okay, so those are the breakout targets. I'm, again, it's basically the euro trade, guys. I'm of the mindset that you see a bigger failure here. Don't know if it breaks 98.40 or 98.38, but for all intents and purposes, even on the breakout, this is upslope resistance. So you could get some kickback here, watch out. It's a nice divergent mark on the 30-minute chart. Okay. Questions on dollar Swiss? That is number 4. Gold. So, making headlines here with gold. We hit dollar CAD, we hit dollar Swiss, so no change to any of those levels. We're testing this 99.02 level now, 99.01 level. That's sort of near-term resistance. Just add this near-term slope that we just added, could be what's in play. As far as gold, so here's the deal with gold. The weekly opening range did break to the upside, but I'm still cautious on that advance. Here's what the XAU chart looks like. Wow, it took the whole thing back. These webinars sometimes rob me of some nice positions. So we noted yesterday that and I threw this on Daily Effects as well, that even if this thing pops through, it's a very clean opening range, and you love these in commodities especially. 1, 2, 3 touches. You got basically a touch of Friday's or last week's low, swing low there. It held. Now it converged on slope. Kind of gave you a really clear focus of the levels you should be looking at. But what do we always say, guys? Resistance is resistance, support is support. Even if the opening range is maxed a little bit higher by some major resistance, we still got to respect that. And that resistance level, as you all have known, is 1433. We've been talking about that level for a while. It's a swing highs from the late 2013 pop right here. It was basically the targets on the upside as we rallied through this. Here's the test. Okay. Here's gold on the weekly charts. A quick reminder. 1433 was noted here as well for the last like 8 months. So it's a critical level, right? It was just above the weekly opening range, and that's the exact fake out I love to see. So I'm in favor of a little bit, the same exact setup I told you yesterday, guys. I'm still in favor of the Euro of a Aussie pullback, washout here. I keep saying Aussie, gold pullback or washout here lower. The momentum, look at that hold ahead of 60 on every spike. Again, today's move right now just spiked right there. It happens to be the 50% retracement of the drop from the high we just made last week. So nice levels. Look, support's still going to be 1414. A break below the objective monthly open, not Mike Boutros' opinion, not Jamie's opinion. 1409 would obviously, in my opinion, be the washout of this near-term uptrend. And then you'd look for 14 and a bigger reaction towards 1380 if we get it. I'm not necessarily targeting that low. I'm just looking for a drop towards at least the weekly range lows, if not the monthly open for a test. This is where I'd look for a clear reaction of what's going on in gold. And again, the daily chart, kind of just begs a little bit of a pullback. Marking divergence all up into those highs. You posted an outside reversal candle. The body was an outside candle of that previous day after spiking into a new high and hitting the 1451 target. Again, a long-term 100% extension on the weekly chart off the advance from 2015. 2016 highs, 2016 lows, 100. Uncanny. And the beatdown that it took after it whipped into that last week, for me, is what had us looking for a little bit more of a fade position near term. So gold, bearish invalidation, resistance, whatever you want to call it, 1433. If we push through that, target 1438, target 1451 again, okay? But more than likely, at least in my opinion, still looking for that pullback here. US trade session in just over 30 minutes. Questions on gold? Going once, going twice. That is number 5. Aussie. Anyone in this? So Aussie, I'm cool with fading some of the Euro moves. I'm cool with fading even some of the Swiss here, but Aussie, I really wanted to see 65.57. I don't want to be a stickler over price, but it's seen so many pivots. It's an objective 50% retracement. It would have got us a little bit closer, even if there's a parallel coming off this, even if there's a parallel of the same slope coming off that low for that July 10th drop, it still would have dropped there. So maybe I'm being a little stubborn. Maybe I'm being a little too meticulous. On a drop like this, I'm much more hesitant to try to fade it. Aussie's coming off big resistance, guys. You guys all know this level that we've been talking about for months. Yearly open resistance, 50% retracement of the yearly range, 70-20, 70-42. It's governed everything in this trade all year long. Look at the closes. Bam, bam, break inflection, acceleration, resistance, resistance. So if we're of the mindset that we registered a more important low, okay, last month, then this decline should hold 69.24, which is why I wanted to see like 69.50s, give us the first initial push. I don't know. Maybe I'm being too stubborn. Maybe I'm overthinking Aussie, but the weekly chart obviously was a good area to look for resistance in the pullback. It's just that we were looking for the pullback to hold here or here. Here's what the chart look like. Whoops. For Aussie. Here's what it looked like deep into the week after a break of the weekly opening range. We talked about the reversal off that key zone again. Looking for a drop for the low day close, the 70 handle, 69.86 will be a 38.2. Drop below that, saw a test of resistance, kept the focus on that last target near 69.57. So, Aussie, maybe that's all she wrote. Maybe it washes out once more. I don't think I'm as comfortable trying to fade this one yet. So if you're holding shorts, a stop above 69.86 is kind of, I think, is a safe way to play it. Maybe I'm stubborn, but I'd still leave a target at 69.60, 69.58, whatever you want to do. Make sense, guys? And again, at this point, you can kind of ditch this slope. I don't want to, leave it too, I don't want to put the focus on this, but those median lines were really nice inflection points, nice median line play, even the 25% line break, instant resistance, further highlights the low day close at 70 here. That's sort of your bearish inval. So we'll see if Aussie can't make a move here for some recovery. Again, ideal, you get that last thrust lower first. Questions on Aussie dollar? Okay, that is number 6. Kiwi, haven't messed with it. Here's what it looks like. It's because we never got an actual play. Tie for Aussie? Want the combo? Sure. I didn't even show you the daily chart, did I? Here's the daily chart. Again, highlighting why 69.57 was for me a spot to look for, but maybe that's all she wrote. We'll see. Kiwi, wasn't really a big fan of near-term price action. Here's Kiwi, first of all, on the weekly charts, and here's what we've been following in the intraday charts. Where's Kiwi? Right here. So we first came into this 618 retracement at 67, was at 64. We spiked through it intra-week. We talked about it as it was breaking this downslope here, just off the highs that we made late last year and the highs this year. It popped through. It closed right there, right? And on the near-term charts, we were at near-term upslope resistance. There was a lot to look at. So we started to say, all right, well, let's look for the pullback. If this is legit, former slope resistance should be support. The inflection point at the objective yearly open, 67.05. Break, acceleration, resistance, breach, acceleration should be support. That's where you want to look. So for Kiwi on this pullback, again, a little different from Aussie. I wanted this pullback to be shallower. This is basically where we wanted to see hold support. So we've dribbled a little through, but we're still basically there. Here's Kiwi dollar on the daily chart. We haven't registered a close below just yet. I mean, you might count that was a couple pips below, just what was that, on the 23rd, Tuesday? Yesterday we closed right in that range. I was looking at this, I didn't know what to do because I just was like, well, if this was the close below, then why the heck are we closing in the range the following day? It's not really, a comfortable break. And here we are again with just a little dribble lower. Not gonna lie to you guys, I don't know what to do with this one. It's not in my wheelhouse of things that I'm looking at right now. Okay, I know Jamie's looking for a long. If you had to put a bullet to my head, yeah, that's kind of where I would want to play it, but I wanted to see 67 offer a little bit more of inflection. Pooja saying, tried a small long at 67.06 yesterday, but stopped at break even. Yeah, I don't blame you, Pooja. I'm all about the break even stops on these very precarious, especially when you're trying to fade a move. Doesn't pay to drop a big stop on it, especially if you're playing it just off of levels. But every time I look at this, I feel like I'm finding a new support level that could hold, and it doesn't. So I don't want to, jump into anything unless there's a little bit more confirmation from near-term price. I hear you on that. Here's what it looks like, okay? So this is just the same slope. I was mirroring this off that swing low. Coincidence? I don't know. I don't know. The slope has been pretty fruitful, but nothing I'd put a position on for it just yet. Here's what it looks like on the intraday. Now, some signs of exhaustion. Obviously, you're seeing again, very crappy divergent signal, but the lows have made lower low in price, higher low in the oscillator, right? If this slope is legit off the lows, you know, like what the heck is that? If this is a break and we're testing it as resistance, then the next thrust should be lower. But then again, you have 67.05 there. It's a 38.2. It's the yearly open we just talked about. So if we break through that, maybe that's, you know, a nice rally towards the 37 region. It's just too tight. It's just price action is too ugly for me to get involved in. So I'm just kind of scoping this one out. I've been stalking this one. Don't see anything in here for me yet. Near-term bearish inval at this point drops back to that 67.62, 67.66 region. It's the objective weekly open. It's the 618, and it converges on that 25% line. Downside from here, if you're holding shorts by any chance, I don't know if anyone in the room is, 66, 678 would just be a soft target. It's the 50 of the range off the low that we made for the month. So it takes the July range, not even the opening range, into account. And then you have an interesting inflection here, 66.60. And I remember this level we've been talking about for a while. It was a close high from one of this advance in June, but really sick pivots on it. I mean, so you have clear-cut levels on the downside break. I just don't think there's anything here to prompt further short action if you're not short. Okay, Kiwi, look for reaction at 66.78. That's number 7. SPX, number 8. Here's what it looks like. Wanted to put together some sort of level as we go through the webinar. Here's what we were looking at on the intraday charts earlier in the week. What page was dollars? Here we go, SPX. And the focus, if you guys recall, was on a recovery off this longer term slope. Near term resistance as we open up the week, that 29.86 level. We had a near term bearish inval up here. Okay, 3,000. Why not? Big figure. You know, headlines look at it. The news guys love to run with, you know, Dow 20,000, this 3,000. Round numbers look good, right? Psychological barrier. But above all that, it was the objective 618 of the drop, and we had slope resistance there. What happened? Well, we came through, posted an outside reversal candle, looked like a little bit of a pullback. I think we were looking at this in the webinar. Here it was, very short-lived, ripped through, acceleration with a breach of the highs, and again, right into 3019, right? Here's 3019, looking pretty tired. So what do? Get rid of this slope. This retracement's null and void. It's been maxed out. Got to take that out. Clean some of this up. Slope is there. Let's see if we can find some new pitchfork resistance or some sort of guidance for this advance. You could look at something like that. Some decent inflection there. Would have put resistance a little bit higher. Might be a little bit of a reach over here or a throw over. A lot of times you'll hear this called a raised ceiling from me and Jamie. Basically, price just stretches just ahead, right? And you're waiting for that last stretch. Might be the case in the Aussie too, with that last stretch to support. But that's neither here or there. A good time for a fake out, guys. All the indications, and this is kind of what I was hinting at yesterday, just seem like the scent of a fake out move here is just on the market. So we'll see what happens in SPX. We just failed at 3019 is basically what's going on here. If support holds at the former range highs right here, just above 3,000, you know what? Work with 3,000 again. Essentially, that's where slope is at this point. the longer term slope just off the lows. Here's what the entire gradient looks like. So all of these were derived just off these two highs. Just parallel. So all we're working with. Extended off the low, held support. This near term slope, if it's in play, don't want to see losses maxed out below 3,000. Essentially 29.90, let's call it on a stretch. DXY tracing out big reversal says Ty, she's a beauty, yeah. Finally. Finally. We're not out of the woods yet. Don't go chasing, okay? If you're not already in a position or you didn't take a position literally during this webinar, just wait till the US Open here. If you get some sort of corrective bounce, your stop needs to be against a high. Okay, it was a ECB release. These event-driven swing highs are perfect, positions oftentimes to take off of. So, wait for your entry. It's a sizable stop from here. If you get the recovery, you might get an opportunity to get back in. But the whole focus is whether you get follow through on this move into 930. I hate to harken back to the opening ranges all the time, but a lot of times it's just that confirmation play. Look at Euro. That worked. Glad something worked on one of these majors. Watch 1180, 1186, same region. We're already poised, and this is where you can get suckered in, guys. Watch out. We're already poised to post an outside day reversal off the objective yearly range lows. In and of itself, if we were to stop the market right here, right now for the day, that would be constructive. But nothing means anything until this candle closed on the daily, and that's when it would be that outside daily reversal. So on the intraday charts, we just broke the median line. You're looking for this. If I bring up the 50 line, it's going to be right in that same, on the pitchfork. I bet you it'll be right there in that same zone. This is your first inflection point. This is your target. If you took a fade on this position with earlier in the session, this is your first inflection point. This is your first sort of initial level. Take a little off, bring your stops to break even or better. At this point, bearish inval. Do Friday's low. We talked about that. 112. It's the breach to completely dissuade any further downside major pressure on the euro. Thank you, Mario Draghi. Any questions on SPX, euro, or anything we've gone over so far? All right. Crude. Here's crude prices. So the slope on that really sharp upslope didn't really do much. It's in consolidation. Recall that after the reversal that we saw off of that major level we talked about for months, 60.06 into 60.45, after that reversal, we were still looking for a break of the monthly opening range low to extend here, 54.60, 54.52. I still think you get it. Again, not just my humble opinion, guys, but just from a structural like sort of decline or corrective move, I want to see another low, and even if it fails at this level, that would register a new low from the low that we registered on the 18th there. So I'm thinking you get the move lower. You got an outside reversal candle yesterday, okay, off of the weekly high. Typically, again, a bearish formation, but where did it fail? Right at the weekly open. So look, it's a weekly opening range. Play the break. I'm going to require a break above 58.50 to get us back towards, a bullish stance towards this zone. Until that happens, I'm looking for exhaustion. I'm looking for that last push lower. Questions on crude? Okay, critical resistance still 58.15, 58.53. The weekly open, for all intents and purposes, again, is basically going to be your opening range low for the week. I know we spiked here, but again, news driven, all that nonsense, still puts the focus on 55.72 near term, but ultimately, key support still going to be that 54.60, 54.50 level. My favorite extensions and retracement overlap. Okay, that's crude number 9. I'd be remiss if I didn't talk about sterling. I haven't touched it, but the levels are still pretty clean. Remember, we were talking about this. Look, this is huge support. Here's British pound on the weekly chart. Low we closed from the post-Brexit drop. It's the lowest reference point that we got. That day closed at 24.33. The 2017, the following year, we registered a low early in that year in January. That close was at 23.74. Yeah, a nice 50 pip range of critical resistance. We bottomed right there last week. Closed well above. So it looks like on a, oh, that's what it looks like on a pukish color chart. Here's what it looks like on the line chart. Okay, so big support zone. Wasn't, enough justification just to jump into a long, but momentum flattening out just below 40. You're looking for exhaustion. Well, yeah, there's a whole new prime minister and there's a lot of headlines coming out, but from a lateral standpoint, this was the opening range lows for the year. If this was a break, sure as hell shouldn't do that, right? You expect that break to give you some acceleration, a big drop. Here's the break of last year's opening range. Well, it was kind of like the first quarter, right? Or second quarter. Here's the break of the previous year's opening range. That was early in that year, right? The moves tend to be more dramatic than this. So look, I don't know if this is going to hold. And again, something could come out that completely makes this thing break down, but the critical level of where we are can't be refuted. Here's the daily chart. Is this a falling wedge formation? Is this, which would typically be bullish, right? Is this, I don't know. The breakdown held a perfect slope target that we were following. This is a parallel of these highs. So simple. Extended off the low, caught support, caught support, caught support, caught support, right? Divergence on all three reference points. Lower low, lower low, lower low, higher low, equal low, higher low actually on this one. So the hallmark is there. You're at a key support zone. Look for a break of this consolidation. It's got to pop at some point. It's imminent. Okay, it's imminent. Here's what the near-term chart looks like. Okay, this is the 120. And on top of all that, here's your opening range for the week. You got a very clear-cut range, 3-point touch. What's up? If it breaks higher, look for the near-term recovery. I'm not saying that the whole Brexit thing's out of the woods, but we don't have to. We're looking for a trade. A lot of different things to look at with this, guys, that would suggest look for a near-term pop higher. So again, that's DXY weakness. You still have US GDP, right? Second quarter coming out tomorrow. It's the advanced read. And obviously, UK is just a whole X factor variable. Topside targets, if you do see the top breach, look for the median line. It's not too far away, but the big pivot would be 25.90. Can't remember the significance of that inflection zone, but was really nice back here. And I didn't want to add this earlier because it's a big assumption that a low has been registered, which we do not know. But if you do that, one thing that would be comforting is that the upper parallel converges on that 618 basically into the start of next week. So you have a sort of a level and focus if we were to get some sort of near-term breach or breakout. And obviously, again, I don't want to start making assumptions that we're just going to break higher, but what you'd be looking at as a target, as targets, the 100 would be 25.94. We were looking at 25.90. So the levels are clean, despite the fact that the momentum is essentially flatlined here. The levels are clean. If we breach this upside, if it is a falling wedge formation, you're looking for 25.94, 26.30 as targets on the upside. Questions, comments, concerns on sterling? That is number 10. Yeah, dollar yen. I just feel compelled to show it just because we are heading into U.S. event risk tomorrow. Look, It's been like watching paint dry. I got short with this spike here. And literally, it was a downside spike. You saw a recovery, then failure. I took a stop against that high, and I've literally been sitting in it ever since. Like I said, last night started breaking down, so I just went break even, and I got washed out on this move here. So look, if it still could fail. Let me say that, but a little bit higher. 106, 108.30. I was kind of early, probably pulling the trigger. I thought this was going to be a more assertive failure move on that reversal candle. Didn't really give you much. It's just been consolidation. You still could see a tag of 108.31, even higher as that slope, maybe like 108.40s, the former swing highs from last week. I wouldn't want to be long at that point. I'd still be looking for exhaustion, but it's just a near-term play I was trying to get into. I actually had a decent chunk there and I didn't even take it, but it is what it is. Here's the levels and here's what it's based by. This actually 108.30, 108.28, if you guys recall, was actually last month's open. You had this month's open as well at 108.18, and that was why that 10 pip, 15 pip region for me was like, you know what, it was worth a little bit of a kickback. And like I said, it did give you some, but pitiful. It's dollar yen, it's the abomination, is why we call it what we do at the end of the day. Is very, lack of conviction in my opinion for dollar yen, even on the daily charts. Again, pistol to my head, I still think you get a pullback than a larger rip, but it is lackluster to say the least in this pitiful 15-20 pip range we've been in. So look elsewhere. And elsewhere you may want to look is euro yen, just something I would just put on the side there. You know me in this pair as well. But the levels, not even on the intraday chart, I had a slope on here. I'm not sure where it went, but here it is on the daily. Really simple, right? This is just, again, a basic parallel action, guys. Yeah, call that a run through, a false break, whatever. Basic support outside reversal candle off that slope. Basic support, we closed yesterday basically at the slope, right? Let's get a little precise here if you want. And then here we go. If things close at these levels, it would be an outside reversal candle off the lows on the back of a, like a 8-day decline? What is that? There was an interruption here one day. Okay, but you get the picture. That was a 6-day decline. We had a 1-day interruption and then another 2 days off. So in any event, right? You've seen the inflection off that range. You've seen what happens when we make a big bounce off that slope. Could be a decent play to play the recovery in euro without having to get involved with the dollar tomorrow. Okay, any other questions, guys? That was $11 yen and euro yen 12. Silver, I don't know if anyone was trading that setup from last week. I don't put often setups on this, but the levels are just, again, they're just disgusting how this continued to play out. 1661, it was the 100% extension from the advance off the lows from last year. And again, one of those ones where if we added a slope, maybe this wasn't the one where we added a slope. But in any event, that 100, right? We maxed that out a couple of days ago. We spiked just below it, pulled back. Support 1621, the former swing highs. The median line held. Again, on a line chart, here's what it looks like. Breach, test of support, super clean. Push higher, finally got 1661. But ever since then, it's been very precarious. And we've been talking about this region of slope resistance as well. I don't remember the last time, or if I put the post here. In any event, here's the pitchfork. Off the lows, low, high, low. Median line break saw acceleration through this pivot region at 1580, 1590. Next major upside target was right here. Little ahead of schedule, okay? But divergence into the highs. You just posted a reversal, a 2-hour reversal candle. or excuse me, a 4-hour reversal candle. If we close at these levels, what does 2-hour look like? 2 hours also posting that reversal candle as well. Off of Fibonacci resistance, max highs, divergence. Looks like a little bit of a pullback. Very harkens right back to the gold move we just talked about, right? Look lower first. Look lower first. Everyone's too wickedly bullish, and it's just a good time, I think, both in price and time. Any questions on silver? We don't cover it very often, but when the technicals warrant, I'm willing to look at anything. There's a side by side for the daily and 2-hour chart. All right, guys, if that is it, I will go ahead and wrap things up. Thanks for everyone who attended today. Remember, Jamie will be up in just a few hours with midweek strategy webinar. Keep in mind, we get those data prints tomorrow from the US. Look, at the end of the day, we're expecting a weaker print, so they're going to be like, oh, it's off from the first quarter, but that's not surprising. The expected read tomorrow is 1.8%. Previous read was 3.1. So look for two things: the deviation off of the 1.8 that we're expecting, okay, and any downward revision to the previous quarter. 3.1 for the first quarter was really more than markets were expecting. It was the highlight of a roaring economy in the US. People ran with it, especially with the ECB on tap, or excuse me, the FOMC on tap. The Fed will be looking at this. So if we miss, even if we come in at 1.8% quarter on quarter for second quarter, if the first quarter gets revised lower from 3.1, that might be even a sort of a bigger hit to the Fed outlook, or increase, let's say, expectations for possible 50 basis point cut. Pooja says, thanks, Mike. You're going to be out for the next 2 weeks. See you second week in August. Good luck. Same to you, Pooja. Enjoy. Safe travels. And I will see you guys on Monday for the free session on Daily FX, and right back here on SB Tuesday and Thursday. Best of luck trading, guys. Cheers.